Economic uncertainty and ongoing tariff disputes have contributed to heightened volatility in the stock market. However, dividend-paying stocks present investors with an opportunity for greater stability. In this challenging environment, investors seeking a reliable source of income might consider incorporating dividend-paying companies into their portfolios. To support this approach, insights from leading Wall Street analysts can guide investors in identifying the most suitable options. Today we have 3 dividend-paying stocks highlighted by Wall Street's top analysts to share with you. But before we get into it, if you find any value in this, can you please click the like button? And for anyone new, make sure to subscribe. It helps our channel out so much and you don't miss out on any new content like this. Reminder: we are not financial advisors, so you should always do your own due diligence before investing. Here are 3 dividend-paying stocks spotlighted by leading Wall Street experts on CNBC and TipRanks. Number 1 is Vitesse Energy, number 2 is Viper Energy, and the last one on the list is ConocoPhillips. Vitesse Energy is the first of the week's dividend picks. Vitesse Energy Inc., ticker VTS, is focused on owning financial interests predominantly as a non-operator in oil and gas wells drilled by United States operators. The company invests in non-operated minority working and mineral interests in oil and natural gas properties, with its core area of focus in the Bakken and Three Forks formations of the Williston Basin of North Dakota and Montana. It also has interests in wells in the Denver-Julesburg Basin, located in Colorado and Wyoming, and the Powder River Basin, located in Wyoming. If we look at the dividend yield, it is 9.34%. Vitesse's board of directors declared its first quarter 2025 cash dividend for Vitesse's common stock of $0.5625 per share for stockholders of record as of March 21, 2025, which will be paid on March 31, 2025. On December 31, 2024, the company paid its fourth quarter cash dividend of $0.525 per share to common stockholders of record as of December 16, 2024. Now see what analysts said about the company. Vitesse Energy is a unique energy company that owns financial interests, mainly as a non-operator, in oil and gas wells drilled by leading U.S. operators. Earlier this month, Vitesse completed the acquisition of Lucero Energy. The company expects this deal to increase dividends and provide additional liquidity to bolster its ability to make accretive acquisitions. Recently, Vitesse announced its fourth quarter results and declared a quarterly dividend of 56.25 cents per share, payable on March 31st. This payment marks a 7% rise from the prior quarter. Vitesse stock offers a dividend yield of 9.3%. Following the Q4 print, Jefferies analyst Lloyd Byrne reiterated a buy rating on Vitesse stock with a price target of $33. The analyst noted that the Q4 EBITDA modestly lagged the consensus estimate due to marginally lower than expected production and the one-time costs related to the Lucero acquisition. Byrne noted the planned increase in Vitesse's dividend following the completion of the Lucero acquisition. The analyst stated that increasing the dividend is consistent with Vitesse's strategy of raising its payout as the expected operating cash flow grows. He added that management aims to keep the dividend coverage ratio at about 1.0 times. The analyst highlighted that the Lucero deal adds to the company's operated production in the Bakken and nearly 25 net locations, which Vitesse believes equates to about 10 years of inventory life. Byrne views the Lucero deal positively, as it is accretive to Vitesse's earnings, dividend, free cash flow, and net asset value. While the deal is a departure from Vitesse's non-op strategy, adding an operated leg gives Vitesse incremental control over its capital and potential additional deal flow, said Byrne. In a report released recently, Northland Securities analyst Bobby Brooks maintained a buy rating and set a price target of $27 on Vitesse Energy. Another analyst, Chris Baker from Evercore ISI, maintained a hold rating on Vitesse Energy Inc. Wall Street analysts suggest a strong buy rating for Vitesse Energy with a $29.13 average price target. Now let's move to number 2 on our list, Viper Energy Inc., ticker VNOM. Viper Energy is an independent oil and natural gas company focused on the acquisition, development, exploration, and exploitation of unconventional, onshore oil and natural gas reserves primarily in the Permian Basin in West Texas. The company is primarily focused on oil and natural gas properties in the Permian Basin, which consists of approximately 75,000 square miles centered around Midland, Texas. Look at their dividend yield, 5.63%. The company paid its first quarter cash dividend of 65 cents per share to common stockholders on March 13, 2025. Now listen to what analysts discussed about the stock. Viper Energy is an oil and gas company that is a subsidiary of Diamondback Energy. Viper was formed by Diamondback to own, acquire, and exploit oil and natural gas properties in North America. It is focused on owning and acquiring mineral and royalty interests in oil-weighted basins, mainly the Permian Basin. The company announced a base cash dividend of 30 cents per share and a variable cash dividend of 35 cents per share for the fourth quarter of 2024. The total Q4 2024 capital return of 65 cents per share represents 75% of the cash available for distribution. Recently, J.P. Morgan analyst Arun Jayaram reiterated a buy rating on Viper stock, but lowered the price target to $51 from $56 as part of an update to his firm's exploration and production models. The update reflected natural gas supply-demand analysis, stronger than expected LNG demand pull, and the possibility of further decline in oil prices. The decline would be due to the combination of record U.S. oil supply, the return of OPEC Plus barrels in April, and global trade risk amid tariffs. Explaining his bullish stance on Viper stock, Jayaram said that mineral companies like Viper own the perpetual royalty interests under oil and gas leasehold, which gives them exposure to growth with no capital or operating expenses. The analyst highlighted Viper's policy of returning about 75% of all distributable cash flow to shareholders through base and variable dividends and share buybacks. Jayaram thinks that Viper is unique due to its relationship with Diamondback Energy. Notably, Diamondback operates a major portion of Viper's acreage, which gives visibility and reduces a key uncertainty that is usually associated with companies in the mineral space. In Viper's case, between EBITDA growth and FCF yield, we see an attractive total return proposition, the analyst said. Analyst Neil Dingman from Truist Financial reiterated a buy rating on Viper Energy, with a price target of $68. And Piper Sandler firm analyst Mark Lear maintained a buy rating on Viper Energy and set a price target of $63. Number 3 on the list is ConocoPhillips with a ticker, COP. ConocoPhillips is a U.S.-based independent exploration and production firm. In 2023, it produced 1.2 million barrels per day of oil and natural gas liquids and 3.1 billion cubic feet per day of natural gas, primarily from Alaska and the lower 48 in the United States and Norway in Europe, and several countries in Asia-Pacific and the Middle East. Proven reserves at year-end 2023 were 6.8 billion barrels of oil equivalent. It has a 3.06% dividend yield. The company paid its first quarter cash dividend of 78 cents per share to common stockholders on March 3, 2025. This is what top analysts from Wall Street said about the company. Jayaram is also bullish on ConocoPhillips and reaffirmed a buy rating on the stock, but lowered the price target to $115 from $127 as part of his update to his firm's exploration and production models. As mentioned above, the analyst is concerned about the possibility of a further decline in oil prices. ConocoPhillips announced a dividend of 78 cents a share for Q1 2025. Conoco stock offers a dividend yield of 3.1%. The analyst said that since ConocoPhillips' 2016 strategy reset, the company has been one of the best exploration and production players. Jayaram noted multiple counter-cyclical transactions executed by Conoco that have lowered its cost of supply and significantly enhanced the durability of the company's lower 48 inventory, bolstering its balance sheet and portfolio optionality to LNG. Jayaram added that on a normalized basis, ConocoPhillips' corporate break-even would be at the low end of the peer group, given that it has much lower sustaining capital requirements than its peers. However, the combination of the company's long-cycle investments like Willow and Port Arthur, as well as the Marathon Oil merger, have modestly increased the oil beta of Conoco stock. He expects ConocoPhillips to be one of the few exploration and production companies in J.P. Morgan's coverage that could increase their cash return in 2025, including stock buybacks of $6 billion. We view Conoco as a core E&P holding given its portfolio strength, inventory durability, and shareholder-friendly cash return framework, said Jayaram. Here are some more words on the street in general, suggesting a strong buy analyst consensus rating for ConocoPhillips with a $131 average price target, implying a 28.53% upside from current levels. In a report released on March 20th, UBS also reiterated a buy rating on the stock with a $137 price target. RBC Capital analyst Scott Hanold maintained a buy rating on ConocoPhillips on March 20th and set a price target of $133. The company's shares closed yesterday at $101.92. In a volatile economic landscape shaped by uncertainty and tariff disputes, dividend-paying stocks offer a compelling avenue for investors seeking stability and reliable income streams. The three highlighted stocks, Vitesse Energy, Viper Energy, and ConocoPhillips, exemplify strong potential for consistent returns, as affirmed by top Wall Street analysts. With unique strategies and favorable prospects, these companies provide opportunities for investors to navigate market fluctuations while enhancing their portfolios. As investors, you should have dividend stocks in your portfolio. Kindly let us know, do you actively seek dividend-paying stocks? What is your opinion on these dividend-paying stocks? Let us know which one is your favorite one. If you find any value in this, can you please smash the like button and make sure to subscribe to our channel? It really helps out so much. Thank you for watching. See you in the next video.